Welcome to third session of chapter 3, that is Reconstitution of Partnership, Change in Profit Sharing Ratio. We will do one problem. We will start with question number 7. Let me read out the question. X, Y, and Z are sharing profits and losses in the ratio of 5:3:2. They decide to share future profits and losses in the ratio of 2:3:5. with effect from 1st April 2014. They also decide to record the effect of following revaluations without affecting the book values of the assets and liabilities by passing a single adjusting entry. Land and building book value is 60,000, revalued figure is 90,000. Plant and machinery 90,000, revalued is 84,000. Trade creditors 30,000, revalued figure is 27,000. Outstanding expenses 27,000 book value and revalued is 36,000. Pass the necessary single adjusting entry. So let's look at the solution. First we will have to calculate the net effect on revaluation to find out net profit on revaluation. That is, first A is increase in the value of land and building is increased by 30,000. Land and building value is increased by 30,000. Then at decrease in the amount of creditors. Decrease in the amount of creditors is it has been decreased by 3,000. Then less decrease in the value of plant and machinery 6,000. That means the value of plant and machinery has been decreased by 6,000. Then less increase in the amount of outstanding expenses, that is 9,000, which means the value of outstanding expenses was increased by 9,000. So net profit on revaluation comes to 18,000. After we calculate from book value and revalued figures of all these assets and liabilities, the net profit on revaluation is 18,000. This is the correct figure for net profit on revaluation. So we will have to calculate whether there is a gain or loss out of change in their profit sharing ratio, because your question clearly states the old ratio as 5:3:2, but the new ratio is 2:3:5. So let's see who is gaining and who is losing. So new share of X, Y, and Z is 2/10, 3/10, and 5/10. Minus old ratio is 5/10, 3/10, and 2/10. So difference is 3/10. That is, there is no gain and no sacrifice by Y, and for Z it is 3/10. That means X has gained 3/10 and Z has sacrificed 3/10. So remember, you will get here minus 3/10. So ignore minus sign. Minus indicates there is a gain. So after the calculation of gaining and sacrificing ratio, we will have to calculate the proportion amount of net profit on revaluation. On revaluation, how much is affected with these changes, with the gain and with the sacrifice. So X, 18,000 of net profit into 3/10, that is 5,400. So for Z, who is sacrificing, it is 18,000 into 3/10, it is 5,400. So when you journalize these incidents or these happenings, it comes to Z's capital account chapter 2, X capital account. That means there is certain adjustment. Narration is the adjustment made for net profit on revaluation. That means with the sacrifice and with the gaining of the partners, this undergoes a changes. There is effect on net profit. That means Z has to get 5,400 from X. This is how the journal entry has to be done. Let's do one more problem. That is question number 12. Question number 12. Let me read out the question. X, Y, and Z are sharing profits and losses in the ratio of 5:3:2. They decide to share future profits and losses in the ratio of 2:3:5 with effect effect from 1st April 2014. They also decide to record the effect of the following accumulated profits and losses and reserves without affecting their book figures by passing a single adjusting entry. General reserve book figure is 18,000, contingency reserve 3,000, profit and loss credit is 9,000, advertisement suspense account debit is 12,000. So pass the necessary single entry adjusting entry. Let's see here. For question number 12 also, you will have to calculate the net profit on revaluation. That is, general reserve is 18,000, contingency reserve is 3,000, then profit and loss account, that is credit, is 9,000. Credit, remember, it is not debit but it is credit. Less advertisement suspense account, that is debit, so it has to be deducted. So 12,000. Out of this you get 18,000. 18,000 is the net profit on revaluation. Calculation of gain and profit, as in the previous problem, it is same. New profit 2 by then, 3 by then, 5 by then for X, Y and Z. Then for old share, that is 5 by then, 3 by then and 2 by then. The difference is gain 3 by then was gained by X. There is no gain and loss by Y. So Z also has sacrificed 3 by then. So calculation of shares of sacrificing and gaining partners in new accumulated profit and losses and reserve. That means for X, that is for X, who is gaining, that is 3 by then gaining ratio into net profit 5,400. So also for Z, who is sacrificing, that is 3 by then, that is sacrificing ratio into net profit 18,000 is 5,400. So this is how we will have to calculate gaining and sacrificing ratio to compensate the sacrificing partner. So we will have to journalize in the last problem, that is Z's capital, that is sacrificing partner's capital into gaining partner, that is 5,400 each. This adjustment or this amount is paid by gaining partner to sacrificing partner out of his share of profits. Question number 14. Let's see question number 14. X, Y and Z are partners in a firm sharing profits and losses in the ratio of 5:3:2. They decide to share future profits and losses in the ratio of 2:5:3 with effect from 1st April 2014. Their balance sheet showed a debit balance of rupees 2,400 in profit and loss account and a balance of 14,400 in general reserve. For this purpose, it was agreed that the goodwill of the firm be valued at 18,000, the land having book value of 30,000 be valued at 48,000, the stock having book value of rupees 30,000 be depreciated by 6%, creditors amounting to 240 were not likely to be claimed, unrecorded investment to be valued at 13,560. Give the necessary single adjusting entry to record the above arrangements. Like in the last problems, there is also old ratio and new ratio, where the old ratio is 5:3:2 for partner X, Y and Z, and also they have also decided to undergo changes in the next financial year. That is, their new profit sharing ratio will be 2:5:3. So in this problem, you will have to see how much the balance sheet show as a debit balance first. Then you will also have to see the value of goodwill and also the effect on the value of land, then stock, creditors, and also unrecorded investment. This has to be ascertained before you quickly jump into solution. So let's look at the solution. Calculation of gain-loss ratio. That is, old ratio is 5/10, 3/10, and 2/10 for partner X, Y, and Z. I'm sorry, I did not write X, Y, and Z here. And also new share of X, Y and Z is 2 by 10, 5 by 10 and 3 by 10. This is the new ratio and this is the old ratio. So when you look at the difference, there is 3 by 10 for X, then 2 by 10 for Y and for 1 by 10 for Z. Which means this for X, he is a sacrificing partner, and for Y and Z, they are gaining partners. Next is we will have to calculate net profit of adjustment to be made. General reserve is 14,400, that is in your textbook. And also less debit balance of profit and loss account is minus 2,400. And also value of goodwill is 18,000. Unrecorded investment is 13,560. E. Increase in the value of land is 18,000. And also decrease in the value of stock is minus 1,800. Decrease in creditors are 240. So the net profit comes to 60,000, which we will have to see how it has to be generalized between the gaining partner and sacrificing partner. So remember in this problem that the value of goodwill, then land, stock, creditors, unrecorded investment. You will have to ascertain whether there is an increase or decrease in this value. And then you will have to deduct and you will have to add accordingly. So after finding out this Y and Z are gaining partners. So as I've told you before, these gaining partners are supposed to compensate. They are supposed to give certain portion of their shares to sacrificing partner. That means, who is sacrificing partner? X is a sacrificing partner. Therefore, the gaining ratio should not be forgotten while calculating how much has to be debited and credited. And also you should not forget the amount of this net profit. Okay, Y's capital account is 60,000 is the net profit into 2 by 10. This is the gaining ratio, his gaining ratio. How much is gaining? He is supposed to compensate to sacrificing partner. So Z's capital account is 60,000 into 1 by 10. So it is 6,000. Z has to give 6,000. So X capital account is 60,000 into 3 by 10 is 18,000. That means this sacrificing partner is getting 12,000 from Y and 6,000 from Z. Altogether he is getting 18,000. So the narration is being adjustment made on account of change in the profit sharing ratio of partners. This is how the adjustments are made. So to come to an end of this chapter, let us recall what are the things that we have learned. In this chapter, that is in chapter 3, we have learned how the Reconstitution takes place. And what is this important? Why is it important? Why this Reconstitution take place? When the Reconstitution takes place, what are all partners supposed to do and the new partner supposed to do? That we have already discussed. And then, most importantly, you should remember that new partner comes into existence not because he has money, but he has certain interest to invest his money to get certain his share of profit out of transaction in the partnership firm. So when this reconstitution takes place, we will have to reevaluate assets and liabilities, and also we will have to find out the correct net profit to be given to the outgoing partner, at the same time to be brought in by the new partner. So while calculating this, you should also remember that this sacrificing ratio or gaining ratio is not only important for this chapter, but it is very important for the calculation of goodwill as well. So in the coming chapters, we will this sharing of goodwill to the partners will be given as a working note. It will not be a part of solution, but it will be just a part of working notes. Therefore, you will have to know that how this sacrificing ratio and gaining ratio are calculated, and how this partner, I mean the sacrificing ratio, a sacrificing partner should get, how much is he supposed to get from the gaining partner, and also how much this gaining partner has to give to the sacrificing partner. That you should know. So in this last problem, there may be cases where there are 3 partners or 4 partners, where only one partner is sacrificing, and in what ratio this sacrificing partner has to get, or in certain cases there may be 2 partners who are sacrificing. So you should also know how this 2 sacrificing partner is supposed to get from the gaining partner, a single gaining partner, in what ratio. Therefore, this you should learn how to calculate this gaining ratio and sacrificing ratio, not only for this problem but also for the coming chapters, where you will be calculating almost in all the problems for the calculation of goodwill. So with this, we come to the end of this chapter. And in the next chapter, that is chapter 4, we will be discussing about reconstitution of partnership, admission of partner. Thank you.